afternoon, everyone. Welcome to the Synergy FX Week Ahead in the Forex Market webinar. My name is Jeffrey Baskin. I am the Chief Currency Analyst and Director of Research for Synergy FX. And this is our webinar that we hold every Monday to go over what's going on in the Forex market, try to give you guys some price levels for you to take a look at, and help you keep in touch with the Forex market as the trading week goes on. Before we start, as always, we have a small disclaimer. The purpose of this webinar is for educational purposes only and should not be construed as trading advice or counsel. If you have any questions, please seek advice from an independent tax or financial professional. Also, please do not invest risk capital that you cannot afford to lose. I can't stress that enough. Please just make sure you have the available funds if you are trading live. If you are looking for a demo account, you can go to www.synergyfx.com.au to download your demo account. The way that we run our sessions is pretty open. We're here for you. So if you have any questions, please feel free to ask them as we go along with the session. If it is on topic, please feel free, as I said, to ask at the time. If it's unrelated to what we're discussing at the time, just save it for the end. I will make time for any questions that anybody has to ask. So we will jump right in and talk about pretty much what's on the front lines of Forex these days, and that's the euro. Last week we saw the euro rally big time, and we had a little bit of euro euphoria, and we went from 26.25 all the way up to 32 and change. We had a monster move at the close on Friday, and we opened a little over 32 and have since pulled back to 31.87 on the euro. Now the question becomes, does this euro euphoria continue and we're going to continue to see euro strength, or is reality going to set in and this is just going to be something that the market has pumped the euro back up, and then everybody that is bearish is going to be looking for shorting opportunities? Personally, I do feel that we are going to see people that have taken profits and gotten out of the euro come back in and short this again. We're sitting kind of in no man's land right now here at 31.89. We have some resistance at the 32, 30, 40 area, and we're going to see if that holds. And if it does hold, you should see some shorts come back in. And then we also have some resistance here at the 3100 level, so that would be another opportunity to add to positions. So we're going to see what happens with this. The main determining factor this week that we're looking at is what's done with Greece. There's been rumors that Greece is coming to the table and they're trying to figure out solutions, and they're starting to make some progress. But bottom line here is there's really no meat behind this. There's nothing there to say that the actual economic situation is going to improve. So yes, you may see some minor boost in the euro as we've seen, but the overall economy, the overall situation across Europe, with the exception of Germany, still is in shambles. There's nothing there that's going to support a big move to the upside. So we may still continue to see a little bit of headline trading and a little bit of positive outlook temporarily, but I do feel eventually we're going to see the shorts come in and push this back to the downside. The levels that we're going to look at, going up is if it breaks 32.50, you should continue to see some upward move, but this 38.2% Fibonacci level at 33.65 would probably, I feel, would probably be about as high as we're going to go short term, unless something drastically changes in the fundamentals. If there's some sort of huge injection of capital from somewhere, or they somehow, some way came up with an ingenious way to fix this problem. So right now 32.50 is the interim level that I'm looking at to the upside. If it goes up, that we will see more upside. If not, I'm looking at short positions, and 3100 would be a reinforcement of this bearish outlook. We get below 3100, and I definitely think that we will continue to the short side on the euro dollar. Any questions in regards to the euro dollar, or anything else that you guys are currently looking at? Okay, we're going to stay on the euro and move to the euro Swiss. The euro Swiss has actually been a really interesting pair to look at. It's not really moving. It's not really presenting a lot of trading opportunities on a day-to-day basis. This is more almost like a hunt. We're kind of in a wait-and-see mode, and we're waiting for one thing to happen, and in order to kind of pounce on this and take advantage of a large move. The Swiss National Bank has put the peg in at 120. We're currently at 120.57. They pretty much have said that as it gets closer and closer to 120, that they are going to defend that mark, and that they're going to intervene and try to boost up, try to weaken the Swiss franc, and push this back in the other direction. So what we are waiting for is if this thing continues to trickle towards 120, and if it breaks below 120, anything significant like 119.65, the rumors that I'm hearing are there are shorts from 119.65 all the way on down to 110, and we could see this thing move in a hurry. And if we take a look at a daily chart on the euro Swiss, you see something similar. We had this gap go from 110 to 120, and a lot of people are feeling that if we break 120 and the Swiss National Bank can't hold off this push down below 120, and the intervention doesn't really help, that we could fill this space and drop from 119 to 110 pretty quick. So this is definitely one thing that we're keeping an eye on. If we continue to get bearish outlooks on the euro, and this continues to trickle downward, it could be real interesting as far as the way that these two currencies are going to fight it out. So what I would recommend is to be very careful as far as if you're going to trade this pair, and make sure you use stops, because you could get very large whipsaws, and in times of extreme volatility, nothing is guaranteed. Stops, take profits, entries, so if you can catch the ride and make a couple hundred pips, by all means, definitely give it a shot, but definitely make sure that you got your stops in, and you're protecting yourself with this pair. I feel that this will come to a head sometime in the next few weeks, and there's definitely going to be some movement here, and some opportunity to put some sell stop orders in, and try to take advantage and take it for a ride. And one last euro note, we'll go to the euro yen. Euro yen, pretty much has been functioning in step with the euro dollar, with the exception of the end of last week. We saw some yen strength come back and push this back down before the euro dollar started to retrace. This actually started to push back down Thursday into Friday last week because of some yen strength. We are back below this Ichimoku cloud here, and we're staying below it, and we seem to be staying below the 100 period moving average. So what I'm looking for is, if the euro is bearish coming out of the gate this week, that this should continue to push down, and we should see this test the 100 level again and head towards the 200 period moving average. So definitely keep your eyes open for that, and see how it's going to react. Once again, any yen pairs, you got to be careful about Japanese Bank of Japan intervention, which has been another rumor. We'll take a quick look at the dollar yen. The dollar yen is currently at 76.71, and a lot of the common rumor number here is 75.50 for when Bank of Japan may intervene. So definitely keep an eye on that. So you don't want to be shorting the euro yen if the BOJ comes in and intervenes and takes out the yen, and then that will send that pair in the other direction, similar to what we saw back here in October. So just be careful trading yen and Swiss pairs. There's definite possibilities of national bank interventions on both accounts, and if that's the case, that will drastically affect your trades, and you can definitely get burned if you're not using tight stops. That's pretty much all the euro pairs I'm going to cover, unless you guys have other things that you want to take a look at. Any questions regarding the euro, what's going on? Okay, let's move on to the Aussie. We have seen tremendous Aussie strength lately. This is a 4-hour Aussie chart. We pretty much had some sideways consolidation, and then it did break out to the upside, and we hit this 78.6% Fibbo retracement and some resistance pretty much right around 107. Before we pulled back. We are coming up to the interest rate numbers that are going to be coming up in the next few weeks. A lot of people are predicting that is going to be, present us with some Aussie weakness. We obviously have not seen that to date, but as of now, this is what we're looking at. So you see that we pulled back right here to this 100 period moving average, and see as this move has traced up, we pulled pretty much to these moving average lines, and that's pretty much what we're going to look for here too. We get a break below this 100 period moving average at 105.60. That should give you a good indication that there's going to be a little bit of a pullback here, and you could definitely see some shorter opportunities, 80 to 100 pips, and then see where you get to with this 61.8% Fibonacci level that was resistance here at 104.34. So you got about 100 and change between your 100 period moving average and your 61.8% Fibonacci level, and if fundamentals hold that people are expecting weakness going into the RBA interest rate announcement on February 6th, then you can definitely find some opportunities here between now and then. That also brings me to the Aussie CAD. Let me just clean this chart up for a second. Aussie CAD, we've hit close to some all-time highs. Actually, we did hit some all-time highs at the end of last week at 106.85. The previous all-time high was 106.66. It's since pulled back. We're at 106.28 right now. Once again, probably going to see some pullbacks and profit taking, and this is going to be going short for the next couple of weeks going into the rate announcement. And if it does break over 107, then obviously that's not going to hold. But for now, bias seems to be to the bearish side, and that should continue coming into this week. And we will see what happens. So if 106.85 holds, definitely looking for shorts, especially since oil's been relatively strong lately, trading over $100 a barrel, and the Canadian economy has held strong as well. So short Aussie, long Canadian, definitely a good mix for this pair. One of the things that we've seen that's been keeping the Aussie pushing to the upside is very strong gold. We had a trend line in place on gold that was pretty much annihilated at the end of last week. We had one big move to the upside that broke through this. Your old resistance / support level was at 1630 and then 1670. Both of those were absolutely just crashed right through, and the reason for this is simply because at times of where people are unsure where to put their money, gold always usually seems to reign supreme. And you have the same situation here, same thing that we saw last year. Anytime that things were unsettled, money always flowed into gold, and you're getting the same thing now. We're at 1734. 1715 is short-term support, and then 1695 would be your other levels to see if this thing is going to hold and remain continuing to charge to the upside. Now, last year at midpoint last year, we hit all the way up 1900. I'm not saying that we're going to get there, but unless the world sees something where things start to settle down, gold is just going to continue to remain strong. And you'll see some corrections, some pullbacks here and there, but the overall trend is going to remain bullish until the market dictates otherwise. All right. I will open it up to the floor if anybody has any questions or any currency pairs that you guys want to take a look at. Anything that you guys are tracking and trading in your own on your own charts, or anything that you want to take a look at, feel free to send those questions in. You can type in the chat box or the question box, and I can go ahead and take a look at the charts that you're looking at. We're waiting for people to decide if they want to participate. Let's move to the dollar Swiss. Dollar Swiss, we've seen, with a lot of other things, we've seen Swiss strength, kind of following in line with what's going on with gold. Whenever gold seems to be pushing up, usually you get the same thing with the Swiss. It's simply because it provides strength and a haven for places to put your money. We hit some resistance and then pretty much just crashed through. We're below the 100, 200, and the cloud. Now we're pretty much just looking for support here. drop some, and we'll go out to a longer chart. Yeah, so we're sitting right at the bottom of the Ichimoku cloud. On the daily chart, if we seem to peek our head out of this, at around 9100, definitely could renew some shorting opportunities. And let's drop some Fibonacci's on here and take a look as well. Alright. So, once again, 9100, could be another decent level, for shorting opportunities to run down to 8850. And, you can take a look at that. And then also another target would be this 200 period moving average at 8750. I do have a question coming in from the audience. Notice your Euro US dollar trade is down 356 pips. What time frame do you trade to have stops greater than? This is actually just a demo account. I throw trades on when I'm showing people how to use the platform, and there's no, as you can see, there's no stop losses or take profits. This is just stuff that I've thrown on. I mean, this has been sitting on since the 12th of January, and this thing's been sitting on since the 21st of December. I mean, so these aren't trades that I'm actually trading. This is just stuff that's been used for demonstration purposes for the platform. So sorry for any confusion on that. If you do have a question, just type it in the question box, and I'll be happy to answer it. But this is what we're looking at for the Swiss. But once again, we're just really cautious with how we're going to play the Swiss, because if the Swiss continues to strengthen, we could see some intervention. John, I'm not exactly sure what you mean by the question that you're typing, so if you could just clarify that, I'll be happy to answer whatever you're looking for. Okay, that's pretty much what we have for you today. I mean, the main thing that the market's watching is the euro, the Swiss, and the yen. We have had a lot of pound strength as well. It's been feeding off the euro, and the economy in Great Britain has been a little bit more stable than we've seen in the euro. So it's definitely taking advantage of feeding off that euro headline trading and the euphoria coming out of there. And we've seen this prop up. We do have some pretty decent resistance at 57.75. So we're gonna see, what happens if we push to that level, and if we do get to that level, what's gonna happen when we get there. So, right now we're at 57.25. And it's gonna be a pretty busy week. Let's open up to Forex Factory. Let's take a look at the news coming up. We'll then open the floor up one more time for questions, and then we will wrap up for the day. It's pretty much just going to look at the major news. We have consumer confidence coming out of the U.S., Canadian GDP, retail sales out of Switzerland, manufacturing out of Great Britain, non-farm out of the U.S., trade balance out of Australia, construction PMI out of Britain, unemployment and Bernanke on Thursday out of the U.S., and then Friday is non-farm payroll. So it's going to be a busy week. We got a lot going on. So, definitely look out for the levels that we talked about today. Make sure that you have your stop losses in place so that, for whatever reason you're incorrect, that you're going to protect your positions. And I'll take one last opportunity to open up any questions that you guys may have. And if not, we'll wrap up the session here. All right. Thank you, everyone, for attending today's session. And if you do have any questions that you want to talk about the market in the future, please send me an email to Jeff, Jeff, at synergyfx.com.au, and I'm happy to field all questions and talk to you about the market as the week goes on. We will be doing a week in review session later in the week on Friday. So keep your eyes open for your emails, and we'll go over everything that we talked about today and see how everything panned out. Enjoy your day, and good luck with your trading.